Welcome, Mitch Argon here with CalNeva Realty. I'm going to take you through the Greater Reno Tahoe real estate market update for August of 2025. Okay, let's get started. Like in prior months, we'll first take a look at the median price. As you can see, prices are, for most markets, slightly down, a couple that are slightly up. Pricing has been fairly stable, as you'll see here in the next chart. For the last couple of years, it's been up and down, but really it's been pretty much of a flat line for the most part for the last 24 months. And that's been true since the middle of 2022. We saw a little bit of price depreciation following the rise in interest rates. It came right back up by the end of that year, end of 2022. So we've been running pretty much flat with a lower inventory and higher prices and higher interest rates. Looking at homes sold, you can see here, again, a little bit of a mixed bag. You see Sparks and Carson City down. These other markets are up. Fernley is down this 1 month. Keep in mind that the numbers on these percentages are percentages, but the numbers can sometimes be fairly small. Like, for example, here in Dayton, 25% up. We're going from 28 to 35 homes. So that's an increase of 7 homes only for that month. And these fluctuate on a month-by-month basis, of course. Month supply of inventory over here. You can see here that Carson Valley is at 4.4 months. So that's kind of leading the pack for the primary markets here, excluding Tahoe down below. And that is up 25% from a year ago, which is 3.5 months supply of inventory. Also of note, you can see Reno is just eclipsed the 3 months of inventory, so it's a 3.2. And you'll notice that to be in a neutral market by technical measurements, it should be between 4 and 6 months. So Carson Valley is in a neutral zone where there's equal pressure up as there is down on pricing. Reno is still seeing some upward pressure on pricing, but not as much by this metric as this moves up. Inventory. You can see up in most markets, although it's down in Carson City, Dayton, and Fernley. We've been seeing inventory rise on a week-by-week basis. With the exception of about 2 weeks ago, we had 2 straight weeks where inventory actually contracted just a little bit, but in general, inventory continues to rise as we move through this market cycle. And this chart gives you a look back on 2 years of what that looks like. I'm drawing more attention here to the Reno market simply because it's the largest market and it shows up most clearly on this chart. But you can see we're currently sitting up here at this time at 834 homes on the market. And a year ago, that was 715 last August. And 2 years ago in August, it was 565. So you can see there's seasonal fluctuations in here, but on a same month, year-over-year basis, you can see we got a pretty good rise coming right through here up to the current point. And you see this rising effect in each of the markets below. May not be as pronounced because the numbers aren't quite as big, but you can see, for example, this next one down is Sparks, next largest market, and you can see we're at an all-time high for the last 2 years, 331 to 258 to 217. So it's up about 50% over 2 years. So that theme continues. We'll touch more on that here in just a little bit. Taking a look back at the month supply of inventory, again, we saw that the Carson Valley, that's Mendon, Gardnerville, Genoa, is up into the 4. You can see that's higher than any place has been in the last 2 years, very clearly from this chart, given seasonal fluctuations. And Reno is just a tad over the 3 mark, 3.2 month supply. That also, as you look back and see, is higher than we were a year ago, and certainly higher than we were 2 years ago, where Reno was at 2.2 months supply of inventory. So about a 50% increase there. This will probably, I would expect that these numbers will continue to rise slightly as we move through this market cycle that we're in right now. So like the prior month, I want to go back and show as a metric how we are faring in today's market with the inventory, homes for sale in the market, compared to how we fared at the 2019 level. So This orange bar through here, this orange line is 2019. August of 2019, we had 1,891 listings in the market. August of this year, where we are now, we have 1,599. That's across this geography up top. So we are still trailing behind, and pretty consistently, we're staying on the same curve, but we're trailing behind 2019 inventory levels. This is a metric that I'm paying close attention to because all of the markets that have seen negative prices, negative price growth, like South Florida, Austin, Texas, Tucson, Arizona, San Antonio, Texas, etc., they have seen their current inventory levels, which is right here on our chart, up in some cases close to 2 times what we had seen pre-pandemic in 2019. We're still comfortably below that and tracking, if you look at the trend line here, tracking below that. So we're holding up pretty tight. But as you can see, inventory levels are rising. So I do expect this will probably continue to climb as we move forward. That is it for this month's episode of the Greater Reno, Tahoe Real Estate Update. If you have any questions, you can post them below. If you got an email with us, you can reply back. If you're working with one of our agents or myself, we'd be happy to chat with you about market conditions, what this means for you as a home buyer or a home seller. It's an interesting time because the markets are in transition, and it's not one broad market swath. There's specific market segments that we would need to look at and compare and help you to understand if you're looking to make a real estate decision in the near term. Full link down below at the Greater Reno, Tahoe Real Estate Report. If you want to look through the detailed pages, that's available for you. Hope you enjoyed this session. Until next month, take care of yourself. Thank you for watching.